Hey guys, welcome back to the channel. Firstly, a very happy new year to all of you. I wish you everything of the best with 2021 and I hope it's a great year. So my wife and I have been working to freshen up the set a bit and make some changes. So you can see there's a few things look different. I've added a drum because I play drums. Got this African art piece here because I'm from South Africa. Got this lamp which is from Puglia. This is in the south of Italy. So if you imagine Italy is like the shape of a boot, right? And Puglia is on the heel of the boot. So we went on holiday there and we got this lamp. And then this little picture of Nana, it's actually really sweet. We went on a family holiday to Croatia and we stayed in an Airbnb, and the host was this lady who just completely fell in love with Nana. And overnight she painted this painting, and in the morning when we were checking out, she gave this painting to us as a gift. So that was really sweet, and we decided to keep it and add it to the studio. So hopefully you guys enjoy all of these changes. Right, back to the video. Now it's the start of a new year, and I found myself thinking back to the first video I did on this channel, which was whether you should invest in real estate in 2020. Now, a lot has changed since then, right? And many of you may be wondering, well, what about this year? What's going to happen in real estate in 2021? And more importantly, should you be investing in real estate in 2021? Maybe you're in a situation where you've been spending more time at home because of remote working and you're willing to spend more on your living needs. Or you're tired of renting and you're wanting to buy a property instead. Or maybe you've been able to save some money in 2020 and you want to buy real estate, but you don't know when. Maybe 2021. So when I did that first video on whether you should buy property in 2020, it was around June 2020, and at that stage we had been in lockdown for a few months. And in that video, I highlighted some of the positives and negatives for real estate. So here's a quick refresh, right? Some of the positives are interest rates. Lower interest rates means that your mortgage payments come down and more people will be able to afford a mortgage. This brings more buyers into the market, so lower interest rates is a positive for real estate. Second positive is government stimulus. So governments around the world were providing financial support to their people and to companies, and this will help them avoid being evicted or having their properties repossessed or foreclosed on. So the government stimulus we saw in 2020, I mean, this was trillions and trillions of dollars, breaking records in almost every single country. So the more stimulus we see from governments, this will be a positive for real estate. And number 3 is remote working, right? With people spending more time at home because they're working remotely and not commuting into the office every day, there's a fair amount of evidence that people are willing to spend more on their living needs. And this is especially true for the suburban areas, because people want a bit more space. Maybe they want a garden or they want a pool, and they're willing to spend a bit more in those areas. So the suburbs have done especially well in 2020. Now the negatives are the obvious economic pain that we're seeing because of the lockdowns around the world. At the time of making that video, over 42 million Americans had filed for unemployment, right? And that was since the pandemic started. So just in a few months, over 42 million people had filed for unemployment in the US, and this is way more than anything we'd ever seen before. So when you have more people out of work, it means that there are less and less people in a financial position to actually be able to buy a property, right? And this is a negative for the property market. And in that video, I said that I think real estate will do quite well in 2020, even with all of this negative news. And in the end, it turned out to be right, because property markets are up around 10% in most markets, and in some cases even more. I mean, as a reference, the property that I have in the US is up 15% in 2020. So now you're probably wondering, what about 2021? What is going to happen in the real estate market in 2021? Stick with me to the end, because I'm going to share with you if I'm investing in real estate this year. So you'll notice that a few things have changed since that first video that I made last year, other than the fact that the studio now looks a bit better, and you know, the gyms have been closed here in Italy for the past 3.5 months, and my muscles are just disappearing away. Interest rates are still at record lows, and this continues to give momentum to the real estate market. Most economists are not really expecting it to go much lower, but they're also not expecting interest rates to go up anytime soon, at least for several years. And from the research that I've done, it seems that many people really think that the real estate party is going to carry on into 2021. For example, you've got Zillow, which is one of the biggest real estate websites in the US, predicting that the real estate market is going to go up by 21.9% in the US in 2021. I think that's maybe a little bit too high, but still a really optimistic estimate from Zillow. And we can see this in a lot of countries because the amount of properties, the inventory on the market is really low, and the amount of time that a property spends on the market is really short by historic standards. So there's a lot of buyers out there that are looking for real estate investments. Now guys, remember that real estate tends to be a bit slow to react to what's happening, right? If you think back to the 2008 global financial crisis, the real estate market only bottomed out, reached the bottom around 2 to 3 years after the stock market had done so. And this is why real estate is often referred to as a lagging indicator, while the stock market, which is quick to react, is referred to as a leading indicator. One way to think of it is that the stock market is this really highly strung, tense, anxious individual, almost like a victim in a scary movie that's easily startled and quick to react. Whereas real estate is more of like a laid back surfer dude that's just taking it easy, relaxing, and really slow to react to what's happening in the market. So if you look in the current recession, our anxious stock market dropped quickly by over 30%, right? Bottoming out in March 2020, whereas our laid-back real estate surfer dude really just carried on going up and up and wasn't particularly shaken by what was going on. So everything's good, right? Property's just going to keep going up and we should invest. Not so fast. There are also some trends that are cause for concern. You know, you see tenants that are falling behind on their rental payments. And in many countries and states, the action that a landlord can actually take to try and recover their losses is very limited because they can't evict tenants during this period. And look, I can tell you guys that for 4 of my properties, I've had to drop the rents quite a bit just to make sure I find a tenant so that that property is not empty. And I've had several tenants being late with their rent payment, usually a week or 2, but sometimes even a month or 2. And that can be pretty stressful. It just seems to me that we can't ignore the elephant in the room, right? Even though the stock market is back at all-time highs and it gives the impression that everything is fine, economically, it isn't. It really isn't. Even with the government stimulus that we spoke about and the lower interest rates that are supposed to boost the economy, the economic activity is still really low. If you look at the US, we're still down by more than we were at the worst in the 2008 global financial crisis in the US. And it's not just in the US, right? This is all over the world. Take my home country, for example, South Africa. The expanded unemployment rate in South Africa is over 40%. And I recently learned, and this is a stat that honestly shook me, is that 42% of small businesses in South Africa have gone out of business since the lockdowns were imposed. I mean, that's crazy, right? Almost 1 in 2 small businesses are gone since the lockdowns were imposed in South Africa. And remember that in many countries and states, evictions and repossessions and foreclosures have all been put on hold at least until the end of 2020, right? But since that is now passed, we may see quite an inflow of properties onto the market at the beginning of 2021, which may affect the property prices a bit. But as I said earlier, there's so many buyers right now with the low inventory levels and the short time that a property spends on the market. Because there's so many buyers, they will probably absorb that quite quickly and we'll see the properties continue to go upwards. So what should we do? Should we be investing in real estate in 2021? Is the surf up for real estate this year? So in South Africa, there's been a strong trend of people preferring apartments and townhouses as opposed to single family homes for probably 5 to 10 years. And so in 2020, I bought a 1-bedroom apartment in Johannesburg. And in 2021, I'm buying 2 more apartments, one of them a 1-bedroom and another a 2-bedroom, both of them also in Johannesburg, South Africa. So these are new builds, right? They're still being developed. And I initially secured them in December 2019, and I've enjoyed the price increase through 2020, even though I don't actually own those properties yet, because I haven't taken ownership. They're still being built, they're still under construction, and they'll only be finished in 2021, at which point I will take ownership and I will need to find a tenant and rent them out and all that stuff. But in the meantime, I'm enjoying that price growth of those properties, even though I don't have any of the expenses yet. I don't have the mortgage, I don't have the rates and taxes, I don't have the levies, and none of those expenses exist for me yet because I haven't taken ownership. So that ended up working out really well. But I can't help but feel that eventually there's going to be some sort of weakness in the real estate market. You know, like we said earlier, that there may be a bit of a delay, right? There is this lagging indicator for real estate, but there's got to be some weakness eventually. Now, when that is, time will tell, because there are many other factors that could affect it and we haven't even spoken about, like the rollout of the vaccines, or whether new lockdowns are imposed in countries to try and contain the spread of the virus, or maybe whether additional government stimulus is created, or whether you subscribe to the channel. And it's also becoming harder and harder to find a good deal because prices have already increased and there's so much competition among buyers to find any of those good deals. But personally, I think that 2021 is going to be a lot like 2020, and we'll see real estate prices continue going up. And this, if you're a property owner, is good news, right? And if you're looking to invest in property, especially in the earlier parts of this year, that could be good news for you as well. But of course, every city, every region, every state, even every neighborhood is different. And so when you make an investment, you need to make sure that you do your due diligence, that you run the numbers, and that you make sure you get a good deal. So that's it for the video today, guys. If you found this video useful, please be sure to give it a thumbs up and subscribe to the channel. You can also follow me on Instagram. Here is my handle, and I'll see you next time.